Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Yeah, I want to bring in Ivan Feinseth, Research Director and Chief Investment Officer at Tigris Financial Partners. The firm has more than $500 million under management. Ivan has a buy rating on the company's stock. Ivan, does just very like your immediate knee-jerk reaction to this, does your rating well, I know you can't answer that question, but your knee-jerk reaction, I'm not even going to ask you, your knee-jerk reaction to the numbers here, you're shaking your head.
It's not this quarter. It's not a quarterly story. It is a major shift in the company. And they have, I think, turned a major corner. But the stock has also run up significantly from a low of 20. It hit $55. So I think it may have gotten a little bit ahead of itself and it may pull back. But I think everything that's going on under the new CEO, Lip Bhutan, is as planned. I mean, they are well positioned to benefit from AI data center demand, AI computer demand, their partnership with Intel, money from the U.S. government. So they are plenty flush to invest in all of their key growth initiatives.
So fundamentally, what's changed, Ivan, when it comes to this company? You obviously sound really upbeat. Is it just a case of having the backdrop because, of the United States government? Is that what's done it? Kind of, but are you really seeing the shifts?
It's everything.
Okay.
It's first of all, it's President Trump's push on what's sold here is made here, investing in U.S. semiconductor manufacturing capacity here, expanding the Intel foundry business, as well as the growth of data centers, the growth of AI-enabled PCs. So they are positioned, I think, perfectly to benefit from what was in the early innings of going to be a long game of the AI-driven growth in both the tech sector and the U.S. and the global economy.
So, okay, I just want to. This is a different company than it was 6 months ago, as a result of the U.S. investment. And I'm wondering what that position, what that investment does for Lip Bhutan's position. Like, when you're the CEO of a company and you come out with a report, you're obviously. You got to worry about the board. You got to worry about shareholders. Now he's got to worry about a phone call from President Trump, because the president likes to talk about how well the stock has done since the U.S. made that investment. How does that change the dynamic?
It doesn't, but it's really funny that President Trump wanted to go from deporting the guy to giving the guy money.
Hey, that's the power of a conversation, right?
But it also shows...
Absolutely.
But it also shows how quickly things can change, certainly from the White House perspective.
Well, it highlights Trump's perspective on driving the U.S. manufacturing infrastructure, U.S. leadership in all key areas, and semiconductors is a very important area, especially that Intel makes semiconductors for the defense industry.
Interesting. Okay, so does it make the defense business stronger?
Absolutely. Hey, there's no better partner. A number one partner. It could be a tie. U.S. government and NVIDIA.
Okay, so
those are the two best partners you can get.
Let me ask this question a different way than Ivan, and that's about where Intel would be right now if the U.S. government had not made that investment. Would this be a completely different picture? Would it have been a completely different quarter?
Well, yeah, I think this has helped. I think this removes concerns, balance sheet concerns. It and allows the company and the CEO to focus on business. A partnership with NVIDIA is great, and the partnership with the U.S. It opens up doors. They're back working with Apple. They're going to be working with everybody. And I think you're going to see Intel as a major contender, as a semiconductor foundry, semiconductor manufacturer to take on Taiwan Semiconductor.
So, okay, going back to Intel, under pressure in the aftermarket, we continue to track the share price, I think down about 4 or 5% as we speak. The forecast for the first quarter, top and bottom line, disappointing. At the same time, it's talking about the CEO saying demand is quite strong, says the chip maker missed a lot of opportunities, says production yields not up to his standards. And then he goes on to say Intel says the company making good progress in 14A production, on track for volume production in 2028, has multiple engineering engagements on 14A. Help me understand what that means.
These are different chips, the 14A, the 18A and the announcements that they made earlier this month at the CES. They got their latest semiconductors on track to go into production to meet huge demand. Demand for all semiconductors is outstripping supply. There's, in fact, concerns of memory shortage and processor shortage. So they got the demand wind is a tailwind. And they are back to innovating and developing and winning customers and working with key computer manufacturers, key hyperscaler cloud service providers, and I think that they got a tremendous tailwind. The stock ran up a lot. It went from 20 to 55. Even if it pulls back to 45, it's a buying opportunity because I think that long term they are going to be back. I mean, I don't think even be back to their former glory. I think they are going to be one of the world's leading semiconductor developers, designers, and manufacturers.
So the Foundry Services division, their factory unit, revenue of about $4.5 billion. It was a gain of about 3.8%, Ivan, from the year before. It currently relies on almost exclusively, as you know, Intel product divisions for orders. It's looking to expand beyond that. Is that crucial for the company's future growth?
It's crucial, but that is the opportunity.
Okay.
To work with everybody, because you got to realize that most of the other semiconductor companies, even NVIDIA, Apple, all of the companies like Google, Facebook, Amazon that want their own processors, Qualcomm, they're all virtual manufacturers. They don't actually manufacture. They outsource to companies like Taiwan Semiconductor and hopefully companies like Intel to manufacture their processors.
Is the U.S. The U.S. is, at least from an investment perspective, things have kind of quieted down a little bit since this summer. But are there any other companies, particularly companies within your universe that you follow, that could see, in your view, an investment by the U.S. government?
That I don't know. The other companies that I like in the semiconductor sector are NVIDIA and Qualcomm, and NVIDIA is pretty flush.
Yeah, they don't need. I don't think they could make an investment in the U.S. government.
Yes, I really think it was great how it turned around after the meeting with Trump and Tan. That Trump wrote a check, and also we have a lot of government incentives to build semiconductor manufacturing capacity here.
Yeah,
we have projects in Arizona, projects in Ohio. So ideally, the U.S. could be the semiconductor manufacturing capital for the world.
So in terms of going back to, and you rightfully so, Ivan, point out the run-up that we've seen in Ivan shares and Intel shares. The information put out a story and it says Intel's forward EBITDA multiple has lifted to 20 times, highest level since 2021, well above the 12.5 times at which TSMC currently trades. This is what I was trying to get to before with our simulcast. I was talking market caps, but it has to do with valuation. Intel now pricier than TSMC. Does that make sense?
Well, I always say I wish we could solve the mysteries of the stock market by dividing two numbers, like cash flow multiple or even PE. Stocks go up for everything that you really can't measure. And this is about Intel's future. So we are going to see, if all goes well, a huge ramp up in revenue, in expansion in margin, an increase in cash flow, and then an increase in profitability. So I think their foundry business will ramp up significantly. And as their new processors come to market, revenue and cash flow and profitability will ramp up significantly.
Yeah, Liputan saying, Intel faces an execution challenge. We are laser focused as a team to improve that. To be candid, it's just our execution that needs to improve. Ivan Feinseth, great stuff as always. So appreciate it. He's, of course, Chief Investment Officer over at Tigris Financial Partners, joining us on Intel.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The World Economic Forum in Davos.
Heard of it.
Okay. He's called it, quote, boring. He slammed the group as a body that's increasingly becoming an unelected world government that the people never asked for and don't want.
So he's like, I'm never going to go to that thing. That's ridiculous. Why? Like, who would waste their time there?
The he we're talking about is Elon Musk.
Correct.
And those are things that he said about the World Economic Forum in the past. Yet today, for the first time, he made an appearance.
He showed up, didn't he?
He showed up and
Do you think he was like,
some news.
Hey, it's Elon. I've been busy at the factory, but
listen,
I'd like to come to Davos.
I don't know how it works. He was confirmed as a last-minute addition for a Thursday afternoon session. He spoke to BlackRock CEO Larry Fink. Here's just part of that conversation.
We do have some of the Tesla Optimus robots doing simple tasks in the factory. We expect probably later this year. By the end of this year, I think they'll be doing more complex tasks. But still deployed in an industrial environment, and probably sometime next year, I'd say that by the end of next year, I think would be selling humanoid robots to the public. That's when we are confident that it's very high reliability, very high safety, and the range of functionality is also very high. You can basically ask it to do anything you'd like.
You're already seeing that in Tesla cars, the software changes that you're doing. And what is it, every quarter now, a software change that upgrades the ability of the robot within the car?
Yes, the Tesla full self-driving software, we update it sometimes once a week. Recently, some of the insurance companies have said that it is actually so safe, when Tesla full self-driving is so safe that they're offering customers half-price insurance if they use Tesla full self-driving in their car.
And that can be monitored by the insurance company? Is that part of the agreement then?
Yeah. I think self-driving cars is essentially a solved problem at this point.
Right.
And Tesla's rolled out sort of robo-taxi service in a few cities, and will be very, very widespread by the end of this year within the U.S. And then we hope to get supervised full self-driving approval in Europe, hopefully next month.
Really, that quickly?
Yeah, and then maybe a similar timing for China, hopefully.
Well, there you have it. That was Elon Musk along with Larry Fink, the CEO of BlackRock. For more on that appearance at Davos, we're joined by Max Chafkin. He's Bloomberg Businessweek senior reporter. He's co-host of the Everybody's Business podcast. He's also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He joins us here in the Bloomberg Interactive Brokers studio. A lot of timelines laid out just in that 2.5 minutes. And that was just part of what he said today. I know you're excited, Carol, for the Optimus robots to be sold at the next year because Elon.
I'm already creating a bedroom for one at my home.
They don't need a bedroom. That's what's so great about them.
Just got to plug them in, right?
Charge them, and then they just do the dishes.
Don't eat.
Is that a realistic thing based on your observations of Tesla and where they are right now with these Optimus robots?
I don't think it's a realistic thing for any humanoid robot, whether it's Elon Musk's humanoid robots or not. I mean, there are prototypes of these things, but of course, it's a big jump from going from a prototype to putting these in environments where unpredictable things have happened. That's the reason why Elon Musk for 10 years or so has been saying self-driving cars are going to happen next year, and we're still not quite there yet. There was a demo today in Austin, another demo, but again, these are very controlled. We're not seeing the kind of mass mass market adoption, unsupervised kind of robotics that Elon Musk that had been talking about, and that we're all, frankly hoping for. It would be nice to have a dishes doing robot in our home.
Do it all, take the garbage out and everything. But it's interesting. We had a conversation with Hannah Elliott today, the auto columnist here at
It'll
Bloomberg.
be in our weekend show.
It will be in our weekend show, and she recently went out in a Mercedes that has kind of their two different programs really when it comes to self-driving, and she was blown away.
But it doesn't. She drew a distinction for us, and I'm giving a preview for our conversation that airs Saturday. There's a distinction between Mercedes technology that runs on NVIDIA and Tesla's technology for FSD, which is fully supported by cameras. Mercedes technology that she writes about
She's blown away.
Has the cameras, but also additional sensors. It's more akin to a Waymo.
Right. Yeah. Waymo is betting on this. And as you said, many other people are betting on these kind of multi-sensor approaches. There are a lot of critics of Tesla, including some very strong critics who basically say this is impossible. Elon Musk's argument has been all along, hey, you drive with two eyes, therefore cameras should be fine. I don't think we know the answer to that question. That is the argument he makes.
But I will say the brain for as challenging as a lot of interpersonal relationships are, the brain is so powerful when it comes to making these split-second decisions that haven't yet been proved. I mean, Elon just now
and yet the brain causes us to often get distracted by picking up our phone or reaching and doing things. So it's
That's a good point.
I don't know.
Well, I mean, I do think that, and Musk made the point about insurance rates and full self-driving.
Right.
We are seeing, whatever your view is in terms of the realistic nature of these kind of robo-taxi timelines, we're seeing huge advances in driver assistance. And that is where Elon Musk, to his credit, he doesn't talk about it this way, but if you just see Tesla's autopilot and full self-driving as a driver assistance system, it's pretty promising. You do have to be engaged, you have to be looking. It's not a substitute for your own eyes and your own judgment, but it could augment that process. And you're seeing kind of a distinction in terms of how some automakers are sort of focusing on that path, while others are going the kind of Waymo, full self-driving route. Musk, I think, is essentially keeping both options open. He has the sort of robo-taxi demo in Austin, but also there are many normal cars with this software built in.
I guess, and I think part of the reason I brought up Hannah is just how she was blown away, I think, by the technology and how great it was. And I just think about, we talk about these robots. Could they possibly, though, I'm looking at advancements in technology, AI, moving along pretty fast, that it could actually happen sooner rather than later? Like, I
mean, anything's possible, but
you don't.
But even Elon Musk even talks about this. There is this thing where getting 99% of the way is very easy, and that last 1%, no one quite knows just how it is. Yeah. And we're talking again about big, heavy machines, industrial robots. There are very advanced industrial robots in factories that can do, fine motor skills, but the factories have, yellow tape around them because you don't want to get too close to the robot because these are heavy machines. They could hurt somebody, and there's going to be a very high bar before putting one of these Optimi in your home. It's not, especially it not only has to do the dishes, it has to be better than your current dishwasher.
We'll see what the consequence is if you do not call it by the proper name.
And if they don't stack the dishes the way I like it, there's a problem.
Talk about relationship challenges. The self-driving car is a solved problem, is what Elon Musk said to Larry Fink earlier today. If maybe from a technological perspective, it's a solved problem, but you're only seeing Waymos in a handful of cities. The robo-taxis from Tesla are only available in a handful of cities. And is it a solved problem in your view?
No, it's obviously not a solved problem. It'll be a solved problem when we all have self-driving cars.
Right.
But, if from the point of view of Elon Musk, from the point of view of Tesla investors, they have a big lead. Elon Musk, in his mind, they are just going to get there. You brought up why is he going to Davos right now? I think part of the reason he's going to Davos is because a lot of eyes are on Davos because Donald Trump was there. Elon Musk is really good at figuring out where the news cameras are pointed, where the kind of conversation is, and putting himself there. So he's going there and he's talking his book. He's talking about driverless cars while there's a lot of focus on this conference.
But having said that, too, coming off of CES 2026, right, we talked talked too about the focus on robots or robotics, and it does feel like that's where the world is going next.
Oh yeah, there's definitely a lot. I mean, there's tons of investment here, and part of the reason is there are these amazing advancements in AI. And yet we haven't quite figured out how to commercialize them. So there are all sorts of efforts to find a commercial, a way to make money on this thing. And of course, humanoid robots are one of these options. There are lots of humanoid robot companies in China right now that are also racing to compete with Optimus.
So mission accomplished for Elon at Davos. We're talking about, he made a lot of news. A lot was written about him. We're talking about him right now. He got the attention. But he could do that anywhere he goes.
It's true, although I think he likes to, put himself at the center. And again, I mean, Davos has, in a way that it's hard for me to remember. It's been a few years where, with Trump making these Greenland threats, him flying there was just so much attention on this thing, and it almost feels like Musk is trying to get himself, back close to Trump as well, being in the kind of, even though I think they just passed like ships in the night, but it's hard not to see, their proximity is getting closer.
They didn't fly there together.
No, not yet.
Not yet. Having said that, we wrapped up the year doing a really fun conversation with you, like kind of the Elon year in review 2025, because there was a lot. If you think about when President Trump came into the White House and Doge, how are you thinking about Elon this year right now?
Well, I think the big question on the business side is SpaceX and the possible SpaceX IPO. I mean, we're going to see a lot of companies try to do IPOs, I think, in the next year or so for lots of reasons.
You say possible. Is it a given, or we shouldn't assume that it's definitely going to happen?
I mean, it hasn't happened. Yeah. I mean, until they file, I wouldn't assume it. Lots of companies sort of talk about that. And if the market changes, I think watching that SpaceX IPO, how much demand is there? How much is it worth? How does that affect the rest of Elon Musk's empire? How does that play with Tesla and the challenges at Tesla? And then the other story, the big one, is the midterm. And what is Elon Musk's role going to be as we head towards this election?
Yeah, I thought I heard already some
$10
money.
$10 million.
Yeah,
Yep.
Kentucky Senate race.
Yep. Off and running. We'll be coming back to Max. We know that. Max Chapkin, thank you so much. Bloomberg Businessweek senior reporter, co-host of Everybody's Business podcast. Check it out on the weekend.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's drive to the close, because certainly on our minds is what's going on with the consumer. We did get some data today. U.S. consumer spending rising solidly in back-to-back gains. You kind of have that going on. We had jobless claims steady at $200,000 in a sign of low layoffs, and the U.S. economy expanding at a revised 4.4% in the third quarter. So, some reads on the economy, and we'll see whether or not this is all good for a consumer. It feels like it should be, but it isn't always that way.
Let's see what Joe Feldman has to say. Senior Managing Director and Assistant Director of Research at Telsey Advisory Group. He joins us this afternoon. So consumer spending rises solidly in back-to-back gains. Carol went through some other data that we got today. Everything's fine for consumers?
So far, the consumer seems pretty resilient. We continue to hear that word from all the retailers we speak with, and you continue to really see it in the data. Now, I know there's some that are suggesting that it's really the bifurcation of the consumer, so that more affluent consumer is really doing a lot of the driving of the spend. But, when you aggregate it together, the numbers look okay.
Hey, I love that you went there with the affluent consumer, Joe, but what about Saks, which filed bankruptcy? I mean, they play into the affluent consumer.
Yeah, was that idiosyncratic, or is that?
Yeah, like what's and I understand retail's can have the wrong product line or strategy, but what happened with Saks? And we've been talking about that a lot here at Bloomberg.
Yeah, I think management is a big part of it. It really had not been managed quite well under Richard Baker, who was the owner. I know there was another guy running it. Mark Metrick was the CEO. However, Richard Baker really owned the company. He was behind the whole thing, and everything he's touched has not done well. Lord & Taylor's gone, but now Saks is gone. And he's really not done a very good job of running a retailer. He gets the real estate portfolio, and I think he's very good at real estate and understands that. So what happened? Look, Prices maybe went a little too high during the pandemic. I think the luxury brands thought they could get away with more. They raised prices way too high, and they've been paying the piper since then as things have started to recover. And that sort of in the more affluent consumer, not the high end, but like that sort of aspirational customer is really what fell off. And
that's like the mass affluent. Like, how would you describe that person, Joe?
Yeah, sort of that mass affluent, I think, is how you would describe it. It's probably, if you think in terms of income deciles, maybe that, the 70 to 80, 70 to 90, those deciles right there.
Okay. That
might, splurge on an item every now and then, but not really be the true, luxury customer.
It's interesting you say that. That customer, and this is anecdotal, it's not, we're not necessarily seeing this data, but in this low hire, low fire environment, it seems like that group is having a tough time finding a new job.
I think you're correct. The wage growth has started to slow down a little bit. When we speak to like the retailers that we cover, some of the grocers, for example, they've talked about that middle income consumer feeling more stress and seeing some changed behavior in the way they've been shopping. So if you're seeing that at grocery, you are definitely seeing that across the board. Now, we did have a good holiday season. We've heard from a lot of retailers who pre-announced a week ago, and numbers were better than expected. December wasn't so bad. So I don't mean to paint such a negative picture here, but it's not all, rosy as it might seem.
Yeah, it's so funny. I was just looking at a couple of names. Walmart's up almost 6% so far this year. TJ Maxx is down slightly, not even 1%. Retail stocks as a whole were up only 3% last year in a year where we knew the S&P 500, strong gains, double-digit gains for the U.S. stock market overall. As for retail stocks this year, Joe, up nearly 4% year-to-date versus less than a 1% gain in the S&P 500. Where's the strength in retail? And as you start to look at 2026 and how it might play out, can you make some definitive calls, or do you have to kind of wait to see based on White House policy, the Fed, and all that good stuff?
Yeah, well, coming out of 2025, we know that the value-oriented retailers did quite well. So Walmart, TJX, two big ones that you just mentioned. But that whole discount world really performed quite well. We think heading into this year, at least right now, the first half of the year, you may see those continue to outperform. But from a stock perspective, investors are trying to make that pivot towards discretionary. The one big beautiful tax bill should yield higher refund checks for most people in the U.S. So there's an optimistic view that, well, if there's higher tax refunds, spring might not be so bad in terms of spending. And there'll be a little more ability for everyone in the U.S. to spend. And so that pivot back towards discretionary is really what you've seen with some of the stocks. You've also seen, as the Trump administration has talked a lot about trying to stimulate housing in some ways, Home Depot, Lowe's, Floor & Decor, you've seen those stocks really start to rebound. Everybody wants to see that happen and see some better strength in those sectors for those stocks to really continue to work.
We're going to get Intel earnings a little later, and we're not getting retail earnings yet at this point. But I'm curious from you, what are the companies? We got a lot of good picks from Dana at the end of last year. What is a pick from you like to avoid? Where would you suggest people avoid?
Well, the avoid, I still think you kind of want to be careful in the middle. And that's where like the companies that are doing well, like a Walmart at the cater to that low to middle, but the middle's trading down a little bit, they're okay. I worry, there's a lot of question about Target. Are they going to be able to turn things around? They have an analyst day coming up in March, and I think there's some hope that they will be able to get to right the ship a little bit, but there's been pressure there. Kohl's is another one Dana talks about that really has, not been able to transform itself and keep pace. So those are a couple of names like that there may be some concern, but I think there's a lot of hope around some of the bigger discretionary like Home Depot, Lowe's, like I said. We still like Costco. We like Walmart. So
Hey,
there's definitely some room for upside.
You brought up Target, and I was trying to remember in my read-in this morning, and Target does report earnings on March 4th. March 5th, we get Costco. February 24th, we get Home Depot. February 19th, we get Walmart. So we're going to be getting a good read. But on Target, there's a great story, interesting story, troubling story on the Bloomberg, how Target is facing a political maelstrom in its hometown of Minneapolis due to that immigration crackdown, disrupting operations and prompting calls for the company to take a stance. But you've got staff skipping work over that crackdown. I mean, once again, we see policy out of the White House impacting companies. That's a real thing. And just got about 40 seconds here, just quickly, if you would.
No, I absolutely agree. It is a real thing. You know, the Trump administration policies have a big effect on how consumers feel and about sentiment. Target, in particular, to your point, has had this issue. There's been a lot of social issues that somehow they're square in the center of it, and you know they're always upsetting somebody for some reason, which is quite frustrating, I think, for the management team. I'm sure it is. You know, they get that taken out on them a bit more than some other companies.
All right. It does look like management, including the CEO, is looking to kind of meet with some of the officials involved in some of this stuff. Joe, thank you so much. Always appreciate you folks over at Telsey. Of course, Joe joining us there. This is Bloomberg.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
New York City is poised to get pummeled with more than a foot of snow this weekend. It's a test for new mayor Zohran Mamdani. A massive weather system landing on the region, threatening power outages, airline delays, and transit system problems. We bring back Craig Allen, Bloomberg meteorologist. He joins us from Merrick, New York on Long Island. Craig, as of Thursday morning, the winter storm watch has stretched more than 1,800 miles from eastern Arizona to western New York, affecting 125 million people. How has it moved just since this morning?
It has expanded all the way to the eastern seaboard now. So the I-95 corridor is caught up in the winter storm watch. And what's happening on the map, since I spoke to you yesterday afternoon at this time, is that the colors are deeper, they're brighter, there's more of it, and that's never a good thing because now you're talking about intensity, problems that will develop from it, and it's now upgraded to a winter storm warning already from New Mexico and Texas all the way across into the Ohio and the Tennessee Valley. I am sure New York and our entire corridor here is going to be next. There's no way in my mind that we could miss out on at least 6 inches of snowfall here. And I would think at this point that, 12 would be our top number early on. But I would not be surprised if we start looking at areas just to the west of, let's say, New York City, or to the north of Washington, or just to the southwest of Boston, that could see anywhere from 12 to 18 inches of snow, depending upon the track of the storm.
Let's focus on the New York City region just for a second here, for selfish reasons. 12 inches of snow in New York. Would that all happen as of now, based on your projections on Sunday, or would that go into Monday too?
It'll go into Monday. This will be a long duration storm once it redevelops, because you're taking this storm that I just gave you the parameters from all the way across from the West Coast over to the East Coast, and then redeveloping this storm right along the eastern seaboard before it leaves on Monday. So this could turn out to be almost a 24-hour event. So there may be times when the snow is coming down very heavily, and then there may be times when there's a lull and it's light and flurryish and there's not too much accumulating. And may even, during those times, it may even mix with a little bit of freezing rain or sleet. Not a good thing, but it holds down the snow accumulations, and then pick up again. So yes, this is going to be a long duration type of event. And the plows will be cleaning and cleaning and cleaning. And that's our area. Think about the cascading effect that goes all the way back through the rest of the nation at the same time, because of all the snow and the ice that they are going to see as well.
How crucial are the next 24 hours or next 48 hours?
Very.
Okay.
Let me tell you what they've done. This is almost unprecedented. They've taken NOAA Air Force aircraft, and they've taken hurricane hunters that usually go out during the summer season and fly right into the hurricanes. They have flown them out on the Pacific coast and down in the Gulf of Mexico today and last night. They started all these runs just to get more data into the system and try to get all the weather maps on the same page here. And that's why these next 24 hours, the data that they're taking in today, the next 24 hours will be so critical to see the exact track of the storm. Because again, if you don't change over to any kind of freezing rain or sleet, this will easily be a foot or more. If you do, then you're dealing with extreme ice and power problems. So there's no win here. It's just a matter of whether or not you're going to be digging out from snow or trying to get your power back.
Is there any chance? I mean, I was just going to ask you which is worse, but it sounds like it kind of doesn't matter. They're both. It pretty, doesn't know. Yeah, they're both pretty bad here. What is it? Just very briefly, what is it about the system that makes it so big?
It has three pieces of all coming together with these ingredients. You've got the Pacific system. Yesterday, Carol, you mentioned that you saw the moisture down in the Gulf of Mexico. It's going to pick up that, and then it's going to get a shot of that cold air that's coming down behind this system coming out of Canada. You put the three together at the right time, and it all phases together, and you've got yourself one whopper of a storm, and that's being stages right now.
Yeah, I feel like that cold temperature, I feel like growing up when you really had cold temperatures, that's when the storms were kind of the trickiest. Well, Craig, I'm sure we'll be reaching out to you tomorrow, so thanks so much for the latest update on that. Craig Allen, of course, he is Bloomberg meteorologist, joining us from Merrick, New York, out there on Long Island.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.